Hello, everyone. It's been about 2.5 months since we last saw each other. Today, I want to present to you the results of the work we've done during this period. We've worked on all aspects of what was already planned, but we've also reassessed the current market because, as you know, this is an extremely fast-paced market. In a few weeks, a lot can change. When planning a strategy for business development, you always take these aspects into account. We took a bit more time than initially planned because we wanted to be sure of the information we were going to share today. I am quite happy with the results and the considerations made during this period, as well as how we started. What was promised was a smooth, solid start, and that's why we chose to launch on a blockchain like Polygon. It allowed us to build an excellent infrastructure, which has proven to be robust. Everything went smoothly in terms of development and implementation of what was done. Moreover, we remained positive about the market trend, thanks to the trust placed by investors. Let's take a look at the graphical trend. This is the daily comparative chart between WINK in cyan and Bitcoin in yellow. Clearly, there's not much to say. In terms of the public market, there are few volumes. In particular, there has been an issue regarding the volumes. From an analytical level, it seems that we don't have volumes, but in reality, the reason is that 90% of the transactions, more than 10 million, have gone into the reserve. So they have gone directly into our WINK Finance portal and are not visible through traceable tools like CoinGecko, where we are listed. There is an appearance of reduced volumes that doesn't actually reflect reality. First of all, we will make direct transactions on the standard pools and manage the reserve flows differently. All the data will be more similar to what you see with standard products, because we will ensure that these major portals track our movements. This is the start of WINK. Basically, we've stayed on a steady line, but right now there's a bit of push from the reserve, with some people coming in and out, small operations, but at the moment there's not much movement. As you know, this was intentional. It has been stated several times that we wanted to start slowly. USDW, the stablecoin, you see, it always stays at those levels. This is thanks to the regular intervention of the balancer that acts when the price shifts. Clearly, these are new pools, so consider that these fluctuations in the charts, these highs and lows, are normal. The more structured the tokens become, the more liquidity there is, the more they grow, the higher the volumes, the more these deviations are reduced, which are nonetheless ignored in the tracking done by CoinGecko and CoinMarketCap. For the record, we are already listed on CoinMarketCap, but they don't show the data because it requires a certain volume. The issue is still related to what I mentioned earlier. The staking part is also maintaining quite high returns. Keep in mind that standard staking on large tokens often goes below 10% easily. I think it will eventually stabilize, within a few months, around 20 or 30%. Nevertheless, these are significant results for a token that is currently showing this kind of behavior. Keep in mind that there has been no marketing activity at all. This means something very simple. The moment we start any promotional activity, the token will rise and can rise significantly. If you remember, we have an incentive distribution program. The percentage you see here, excluding the stablecoin one, because the stablecoin's rate is fixed and predictable due to its different mechanics. But this WINK one, which is variable, changes based on how many hold the staking position. Based on the distributed incentives, there is a distribution every minute. Where do these come from? They come from the ecosystem pool, which is a very large pool made up of almost 300 million tokens. Where are we? This graph is weekly, and we are here. So at this moment, it is this pool that is paying these incentives. I want to clarify something because many people have doubts. The initial 3-month staking period expires on April 9th. If you do nothing, you will continue to receive rewards. The only difference is that the position is no longer locked, but is sellable. If once the position is unbound, you want to reapply a constraint, there is a bonus in tokens, and there are formulas for 3 months without a bonus, 6 months, 12 months, 24 months. To talk about distribution, we have always said that the project will be based on the creation of actual profits. As you can see, the program is that after a certain number of weeks from the launch, consider that this program was made more than 2 years ago, this graphic you see, so it has remained valid. Over time, the products we launch generate profits. Those profits are sent to a buyback fund, which repurchases MYNT tokens, thereby creating constant buying pressure. After that, the purchased MYNT tokens are sent to the incentive fund and distributed from there. Essentially, we will reach a point where the initial pool after the 3 to 4 year program is depleted, so it will be finished, and all incentives for maintaining the tokens will come from the fees earned through services. Speaking of products and profitability, what you've heard about so far was more about infrastructure. For instance, lending and similar functions are not primarily aimed at generating profits, but at providing a service and ease of use. For example, using tokens as collateral without selling stake tokens and similar operations. There are activities you already know about and that we have already discussed, for which development and structuring activities are ongoing. In particular, we have focused more on the finance part. But I can tell you that on the social side, things have progressed and there is a much more efficient infrastructure in development that will tie into the entire system. For the Metabo part, we have seen the restructuring of the LMS system to get started. So the training and courses part, the gaming part, is working on the initial stages, but it requires a bit more long-term work. I still consider these products to be part of the infrastructure, except perhaps for the Metable and video game parts, which can bring in significant revenue, but a market needs to be enabled around these products. Winkspace, with the account system, already exists. We need to release the new version with the advanced chat system and mobile applications. The products I'm talking about today have been the focus of study over the past 2 months, because if before we said, let's go with the handbrake on, prepare, create infrastructure, now it's time to start talking about money and growth. So, where do we go when we start talking about performance? You start moving towards very active markets and products that generate a lot of volume. First of all, we thought of this software, mirror trading. What does it do? Essentially, it's an advanced copy trading software. It allows the analysis of traders on different blockchains, enables direct operations, and also the execution of automations. This type of tool falls into a category of products where the most active market is Solana. Just to give you an idea, I've prepared a few examples. These are some of the most well-known platforms in the sector. This is GMGN, which is active on Solana, Binance Smart Chain, Tron, Blast, Ethereum, and Base. However, the most advanced features are on Solana. What do tools like these allow you to do? First of all, charting. Keep in mind that we already have the system base for the graphical part. They allow for portfolio analysis, including traders' portfolios, and they analyze transactions. You can literally choose to copy the trades they make, trying to replicate their trading results. GMGN, just with buying and selling activities, generated 190 million in revenue last year. Others are around 50 to 100 million. Troin is a Telegram bot. It doesn't even have an interface. Around 100 million in revenue, and that's just on Solana. Estimating the business turnover in this market, consider that creating a good product that gains adoption and captures even 1% of this market, which is worth 1 billion a year in commissions. They earn a lot because they take a 1% commission on every trade, both in and out. We will leverage our trading experience, especially using software like TradeStation and Multicharts, which offer analytics on another level. Here, I found myself very limited when looking at the available tools, the information they provide, and the depth they allow you to achieve. For example, the concept of developing automated systems based on historical data or predefined rules doesn't exist. We can work on this, and if I have to compare the products we've discussed so far with products of this type, in terms of profitability, if a normal product can generate 1 in the first year, a product like this can generate 10. It's a fast market. If you offer something useful, liquidity flows move quickly. You connect Telegram, it creates the wallet for you, gives you everything ready, you just need to load some funds and start copying. Additionally, there are no tools for non-professionals. We want to create a light version, which suggests potential good wallets, providing a whole series of instructions, advice, and ease of use. It will integrate with another important product for us, the Wink wallet. In that wallet, all these products will be together. The profits will be redistributed, and holding WINK tokens will bring discounts. So there will be a visible incentive for tens of thousands of traders directly related to the WINK token, which will also land on Solana. So one of the next steps is the launch on the Solana blockchain. After that, we'll make the same move on the Binance Smart Chain and probably add Base and Arbitrum. Solana is a whole different world. It's an entirely different code. The contracts are different. It's unrelated. The peculiarity is that it has extremely low costs and incredible speed, meaning the applications you can build on Solana can't be done on any EVM product. And it has practically become the home of meme coins. The step we want to take is to enter the Solana market. Why? Because on Polygon, we sought infrastructure, we sought foundations, and we found them. Polygon relies on Ethereum for security, but with very low fees. It's fast, efficient, and communicates with any exchange. So essentially, it's a bit of a universal blockchain, excellent as a base. By moving to Solana, we are now doing the opposite. We are seeking attention. First step, development of the first version of the software, which is already underway. We aim to provide our added value, an automatic and free showcase for WINK launching on Solana. Then it will communicate with other blockchains, integrating this app called dBridge, where essentially, even now, if I go and put WINK, it appears in the list. I can tell it, for example, go to Solana and give me SOL on Solana, and vice versa. So it will be possible to transit between one and the other. We need to do the listing and put the liquidity on the blockchain. This allows us access to more markets to generate more volumes, also because arbitrage opportunities are created. Because if the price of WINK on Polygon, Solana, or other platforms differs, it creates opportunities to buy on one side, transfer it, and sell on the other. This generates various useful opportunities that stimulate our own market. Clearly, it serves as a showcase to access the entire world of WINK, leading to WINK Finance, the opportunities available here, and the other tools we're developing. The other killer app I wanted to talk to you about, because it's a bomb, is MYNT. While with Mirror, we dive into the hottest sector in the world right now, where all the action is. With MYNT, we are resurrecting a dead market, which is the NFT market. As of today, it's worth 50 times less than its peak. Why? Because it had risen, not because it was useful, but for the same reasons everything grows quickly, euphoria. But now we want to take a step that changes the game a bit. As you know, having an NFT is a bit like having a postcard, a car, or a house. No two are exactly the same. I might have a car, but mine might have better accessories, a different color, or an exclusive color. These can be actual assets with different values, like the lands in Metable, which represent the ownership of virtual land that can be used in this metaverse to host events and activities. Based on rarity and interest, the lowest price of the NFT is generated, which is the lowest value traded on the market. This defines the floor price, the base price of the collection. And what if we had something that made this floor tradable? I don't need to have a physical NFT that, if I buy it, I have to hope someone else will buy it from me. I have to hope to actually resell it on the market. It's not guaranteed. It might just stay there. Imagine if, based on the rarity score, each NFT allowed for an exchange with a liquid NFT. It's practically a fungible token that represents a rarity point of that collection. Essentially, having 100 of those tokens is like holding an NFT with 100 rarity points. So I can take my NFT, give it to this reserve, and get liquid tokens, which I can use for liquid trades and even for lending without liquidity issues. I can make a sector that is currently blocked, liquid, where you actually have to find a buyer for your asset. We break down that barrier. There's a reserve that acts as an intermediary for this, where the user with liquid tokens, which can be bought with any other token, can spend them to buy an NFT from the reserve. Everything is regulated based on the floor price, and there are mechanisms that balance these things. Clearly, this also simplifies the famous staking on NFTs, which is highly requested, including for ours. Essentially, if you have an NFT and that NFT is worth 100 rarity points, you are entitled to a certain reward over time. We divide the reward based on the rarity points of the NFTs owned or the liquid NFTs placed in the pool. This greatly simplifies everything and makes it automatic and smooth, even for very different collections. So we make a fungible market out of what started as a non-fungible market. This will require the collaboration of other protocols, as we will invite important protocols and create these pools. At the beginning, we will fund it ourselves, then gradually we will ensure the market comes in. This is a killer app, meaning that if the market finds the tool useful, it doesn't just take a slice, it changes the whole thing. There's nothing like this on the market. There are solutions that take a piece of this and do it in a segmented way. There's nothing comprehensive. So, with these two things, I've told you about two concepts I've worked on for a long time. Together with the other guys, we discussed these ideas and delved deeper into them. And I can tell you that usually, just one of these, if it takes off well, it's pointless to say where Wink's value will go. So at first, we started off calmly, but now we're going to step on the gas. This will be the first step. Mirror is the first weapon. It will start to draw attention. As soon as we release some advanced analysis tools and features not offered by competitors, we will start bringing in the market. And this will happen in a few weeks. Regarding the chains, if you see I made a comparison here, Polygon, where we are currently, has 719 million locked. This is not much compared to Ethereum's 46 billion and almost 7 billion of Solana, Binance Smart Chain at 5.3. You see, the markets we are about to enter are much larger. Look at the volumes, 61 million traded on Polygon, but look at Solana, 982 million, almost like Ethereum. This is the market we are about to enter, and that's why I'm telling you that if we've been good and calm so far, we're about to take off. If I had to go into detail, I would need to explain 20 use cases, 15 of which are unique. I could talk for 2 days. It's something extremely complicated to develop. For example, it requires us to have our own blockchain node. We need to gather a whole series of data because we've encountered providers whose data is either dirty or very delayed, doing high-quality work, therefore creating a platform. At the level of these products, which provide all this information with similar speed, is a very difficult and structured job to do, but it brings a considerable advantage. If we need to choose a hook to attract the market's attention quickly, this is probably it. There is also another reason why I'm telling you this now. We thought the alt season would start a bit earlier. Since it hasn't started yet, it gives us time to work on these solutions without losing the market. There is also another big change compared to the last cycle. In the last cycle, when the market cooled down, the speculative world, including memes, was dead. Here, despite now being back to relatively low levels, in terms of prices for both Bitcoin and Solana, a good amount of activity and volume has been maintained. What does this mean? It means that there has been a structural change in this market, which is starting to sustain itself. So this is no longer a temporary phenomenon, which also changes our stance on this market. It's something that tends to provide consistent results in terms of profits. The fact that we weren't too public initially meant that this pie you're sharing through staking is being divided only among you, because the price would have increased. You've had a double advantage. So, those who have been with us from the start haven't faced market opposition and have significantly increased their position. It has been beneficial that during this period, we have worked more under the radar. Now we are starting to rev up the engines seriously. Everything we've discussed so far remains on the agenda, and it stays that way. Now, we're looking at what gives us the biggest push. We're starting to see returns, so we meet the first criterion, which is to start generating real revenue to drive the price up and ensure incentives for holders. As you earn, the price must grow. That's the policy. Even when the market crashes, the goal will be to remain stable, and that's when Wink will finally get noticed by the masses. Now let's enjoy this euphoric market phase. We launch a software that starts being used, people notice it, start making transactions, and flows begin to come to Wink because everyone realizes that the profits are put into this fund and used for buybacks. It's the protocol itself that buys the token, the healthiest operation you can do, like a company buying back its own shares. Consequently, it's a medium-term investment. So they say, okay, I made 2,000 in meme coin. I did some copy trading, it worked well. Let's put something in staking, which I can then reuse in lending. It's a virtuous cycle, it sustains itself. Today I wanted to share the results of this work. This is also the reason why I unfortunately had to neglect some activities a bit. For example, public communication, but I apologize. We will talk a bit more often and resume communications with the public. There are many requests in international chats regarding the distribution of rewards that were promised. Some had pretended to have more than 100 accounts. It's not an isolated case. Unfortunately, the tool we used, Zeely, didn't allow certain types of analysis on the authenticity of an account. In hindsight, it's something we could have managed differently. Honestly, I didn't feel like prioritizing this because that verification work would take me several days. I didn't think it was right to do this before defining the path and ensuring those who took a financial risk on Wink, namely the investors, got results. I needed to deliver a plan of action that would close this cycle. I'm going to sort those things out. Whoever needs to take action will do so, and then we'll turn the page. I'm quite satisfied with where we are and where we're heading. I hope you're positive about what we plan to do. Your opinion is always important. I hope we continue down this path together, and that especially if we wait a little bit to release these products, in a few weeks, you'll see that the buzz will start. We are building quietly for now, and then we'll drop the bomb on the market and launch all our marketing efforts. So that also means the entire SEO indexing part, the traditional marketing part. Next time, I'll try to give you some previews, show you something practical, and we'll start using our products and spreading the word. All right, everyone. Thank you all, and have a good evening.